One is a short due diligence period. The sellers really want to just like, no, it's like, okay, it's sold, it's done. And so it's 30 days. And we're pushing back on less than that. They want it less, but we want to make sure we can go through the rent rolls and do all the due diligence.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Richard Ellison has been in real estate for 17 years. He was a computer technologist for 29 years. He left corporate America just 4 years ago to work full-time in real estate. Richard, welcome to the show.
Hello, thank you.
Absolutely, Richard. There are 3 questions I ask every guest who comes on the show. In 90 seconds or less, can you tell me where did you start, where are you now, and how did you get there?
I started with getting licensed back in the 80s. I did a fix and flip once back then, and I came back to it back in 2016, researching what to do before I left corporate America. And I'm now in value-add multifamily and asset recovery.
Gotcha. Okay. So you left corporate America in 2016. What was the impetus for that?
I left in beginning of 19
Okay.
was either move 1,000 miles away or take a severance.
Gotcha. Okay. So the company was restructuring in some capacity, and you decided to take the severance and then said, what am I going to get into next? What was your first move in real estate?
I thought I needed to replace my income, which I did. And I did residential wholesale in a very tough, hot seller's market. So it didn't go well. We had 8 contracts in 4 months and settled on one of those 8.
Wow. Oh, wow.
So
What went wrong with the 8 contracts you had such that you couldn't wholesale them?
one, the bank rescinded the contract because it was too good. 3 were oil tank remediation problems. And 2, we just couldn't sell. This was the working executive market was glutted with 600 days on market, whereas the median home price was like multiple contract presentations, overbid, over ask, and just way too hot to get a good price on properties.
Interesting. So you couldn't secure the contracts at a price where you could then make anything on the wholesale.
Correct.
Got it. No, that's certainly a downside to the wholesaling strategy. Oil tanks in the property, that sounds more like commercial properties, or is there something specific to where you were wholesaling that I don't know about?
Up here in northern New Jersey, oil tanks were commonly buried, usually like under the front driveway or backyard.
Right.
I had lived and done real estate where they were in the basement and heard about plumber cutting torch problems, but not in the ground.
Right. Yeah. I actually remember as a kid when we hauled the oil tank out of my parents' house. So when they'd finally converted over to well, they didn't convert, they had put an oil tank in, but then there was also steam heat in that house, the old home. But they finally got that oil tank out of the basement. But yeah, having those in the ground, I can only imagine would pose a serious number of problems.
EPA, leak, remediation, you have to dig a ton of dirt up.
No good. So what was your next step? Wholesaling was a bust. You said, I got to do something different. What'd you choose next?
COVID was hitting about that time, and so I pivoted to asset recovery. And again, when you're investing in real estate, you need cash and cash flow. When I see people crash and burn, they don't have that, and they overbuy. And so I wanted a cash flow business. So basically, if somebody doesn't pay their property tax or their mortgage, eventually the local government forecloses and auctions, and the winning bidder pays $50,000 for a $10,000 tax liability. 50 minus 10 is 40 is due back to the former owner after the IRS, local code enforcement, and the mortgage. Right. So we contact the former owner, and a lot of times it's the family because the former owner is deceased. And so we contact them and offer to help them get it back. Oftentimes we have to hire an attorney that we have a working relationship with that doesn't charge until the end when we get the money back, and they charge a fair rate. So we help them out that way.
How did you, and let me ask this other question first, is these are tax lien properties. So these are property being sold by the county or the city for unpaid taxes. This is different than bank foreclosures. Is that right?
Correct. It's two different
Okay.
situations.
Right. How did you develop this strategy? You say, hey, I want to go into asset recovery, but that's pretty nuanced to figure out a way to
Yes.
do this and make a living off of it. So how did you figure out that you could make a living off of doing asset recovery?
Well, starting back in 2015, 16, I started researching what's the latest constructs of real estate today, because back in the 80s, it was basically buy, put 20% down, rent, save up, buy the second one, or fix and flip. There's two strategies basically back then that I remember. And so I just paid a lot of money for a lot of different training programs, and I found a situation, and then I would evaluate the marketplace. And I first looked at the buying side. I was like, okay, this is not a state that's very feasible to do that. And so a lot of price properties are bid up too high. So especially in the seller's market. And then where I could go, there was too much land and not enough demand.
Hmm.
So I looked at the other side of the coin of that and going, well, what if I help the former owners? And so I bought a training program on that, and it made a lot of sense to me. And I've had to build it out since then and completely rewrite all the scripts, the business processes, the CRM tool, the whole how to research, how to find people you can't find. So
Let's use that 50 and 10 deal. The seller owes 10 grand in back taxes. The county sells it off. It fetches 50 grand at auction. And let's assume that there is no, I guess in this case, there wouldn't be any mortgage because the difference is 40. What do you do with that? I mean, is the problem that these families are not getting that 40 grand, that difference is not actually getting paid out? Like, what's the problem in the system right now that you're helping solve?
well, in some jurisdictions, they are notified, but usually notified by the last known tax address. And so a lot of time the family is not notified, because the government is not bound to find the people. It's just bound to notify the last known address.
Right.
And so oftentimes they don't even know. And other times they just think, well, we lost it, it's gone. It's
Right.
like, well, yeah, but I can help you. What? Yeah. And in one jurisdiction that we started in and paused, and we're probably going to come back to, it's a year-long process, and you actually have to file for the surplus before the auction. Once the auction happens, you can't get the surplus. So
Are you kidding me?
I'm not kidding you. So it's like a 10-month process, um, of finding the people, and then there's a drop dead date that they lose the property, and then there's a filing period for the surplus, and then the auction.
Right.
Add that all up, it's about 10 months. So eventually I'll get to it because I see a lot of opportunity there. A lot of people we can help. And I'm moving my process forward to pre-foreclosure workout instead of after the auction. I'm going to try and educate them before and say, hey, do you have the tax? I mean, the money to pay the tax? Yes. Here's you better call this number.
Right.
And if not, we can help you out and get you probably more than you get if it goes to auction.
I often wondered that when we were buying foreclosures at the courthouse steps, a different type of foreclosure. These were bank foreclosures. I always wondered what happened to that overage. Did the end, because I know technically the homeowner, again, let's say they owed $10,000 on their mortgage and the house sold for 50 at the courthouse steps. They're owed 40 grand. I'm not so sure that actually ever happened. Or if it did, I think it was fairly rare. Am I barking up the right tree, or do you think I think I'm missing something?
From what I found so far, you're accurate. The mortgage company does not have an onus of responsibility to notify the former mortgagee. So they just know that they lost it, they've been evicted.
Right.
And so, and therein also lies the stress. Sometimes they move in with a family member, so they don't have an official address. If you got their cell phone, hopefully they still have it, usually not. So finding them can be a real trick.
Yeah, absolutely. Yeah, I'm thinking back. The further away from this event I get from it, I'm like, man, that was really bad for the guy that was selling his, or not selling, but was in foreclosure on a property. He was in foreclosure. The auction was the next day. How did that go? It ended up, I bought it. Oh, it was under contract to sell. So the house
Okay.
had a contract on it to actually sell and close 3 weeks later, but the guy was a drug addict, and he didn't bother to tell his real estate agent that, hey, by the way, I'm in foreclosure and I'm about to lose the house. So nobody ever actually reached out to the bank or anybody else. I bought at the courthouse steps the next day and found out that, hey, there is an end buyer already that wants the house. So I just turned around, talked to all the agents. I said, hey guys, don't worry about it. I'm now the new seller. And I just married him up, and the same buyer ended up buying it. But I mean, it was like $33,000 that guy gave up. I mean, it was a little house. It was like $100,000 house. And I'm like, wow, I kind of actually, looking back on it, I feel really bad about it. Cause it's like, dude, like, maybe if you weren't a drug addict, you could have paid attention to this and not had this happen in your life. So it's got to be kind of a rewarding spot to be in on the other side of it. And again, that was a really weird situation that I probably didn't know what I was getting into until it was all over. And I'm like, okay,
You may not have known the whole story going in, and you're
no,
just standing on the auction steps. It takes research and talking to these people up front to figure out what's been going on.
right,
And quite frankly, the mortgagor would probably have delayed it 3 weeks.
right, right,
And the sheriff would have says, "Oh, you've got a seller. Here's a valid contract.
right. Give the
We'll
guy,
delay it 3 weeks." I see it all the time in the online auctions, delayed or
right,
postponed.
sure.
Boom, boom.
Yeah, what was really sad about that, and I didn't have the heart at the time to tell the guy because, he was still living there. So we bought the house, courthouse steps. He's still living there, and I gave him $500 for cash for keys, and he was elated. And I'm like, oh, buddy, I'm so sorry, but I, it's just
But if he got the full 30,000, he may have just stuck it up his arm and died.
correct. Yeah, very, very, very possible. Very possible. So I don't know one way or another, but I would only imagine that being able to help people in that asset recovery side of things is probably a pretty positive phone call when you say, hey, I can actually help you figure out how to recover the excess proceeds from sale. So that's pretty cool. Tell me about the multifamily side of things for you. Asset recovery is one thing that's a pretty unique and nuanced asset class, something that, or not asset class, but strategy, I'll say, that probably doesn't have a lot of competition in it. Multifamily, on the other hand, is highly competitive. How have you effectively scaled your multifamily properties?
Well, the difference between residential and commercial is it takes a team in commercial.
Mhm.
And so we have, I focused on learning how to raise money. I went to a capital school and met one person in there, and we started talking about a year and a half ago. And Michael's up in Cleveland, and we just had the same attitude towards the tenants are our customers. The investors are our customers, and we have a strict responsibility to take care of both of them, do it right. And so we saw eye to eye. We have same attitudes, and I said, "Yeah, let's work together." He had been putting in letters of intent, 4 or 5 a week for a year. He kept asking, "Why didn't I get it? Why didn't I get it?" And meanwhile, he's in another mentor group, a multifamily group up there, a mastermind group. He met two other people, husband and wife, that had 10 years fix and flip and residential experience. So I'm like, okay, we've got the guy who has the 37 years commercial construction. He's doing the underwriting, the LOI writing. I'm working on fundraising and technology. These guys, the husband and wife, case processing and dealing with the mortgage broker and the lawyer, and get that across the line. So we've got a good team. And they have two property management firms in 4 and 13 states. So they're big companies, and they use Appfolio. So they use a good property management software package. And so I'm looking at this going, okay, we've got a full team, and plus we have an attorney that they've worked with before. So all of a sudden, what happened was he cracked the code, and just a strange confluence, got 4 contracts or LOIs accepted within 2 weeks. Yeah. And so I'm sitting there going, that's $9 million of cash equity we need for a limited partner in our syndications between these four.
Yeah.
So I'm like, okay, so the couple has their 10 years of experience. They started tapping their organic network of people who know what they can do on the fix and flip side. They raised the lion's share, almost all of the $4 million. And we canceled the contract on two of them. And we settled on one in July, 77 unit, $6 million all in with CapEx plus the acquisition price. And we just settled Friday, a few days ago in December, on a 96 unit. That was 7.5 million approximately. And I'm kind of pleased because the 77 unit, the PNC agent insured it for 9 million repair value, replacement value. So we're estimating, our underwriter estimated this 6 million is going to be worth 9 in 4 years. So he's spot on with that. So we stopped writing LOIs. We realized we've got to get our fundraising in order. The construction is coming along, but not fast enough. So he wants to work on building the right team that can turn these properties, these units fast. And then we just need to circle up and get our Appfolio investor portal put together from the back end rental property management piece so the data flows through, and nice portal on your individual investment, the property, and the whole portfolio views. So that's going to take a little while, and that's okay. Then we'll be able to go fast forward. And our plan is to do 20 to 30 million dollars of properties a quarter over the next several years. And so with this kind of team in place, I'm confident we can do that. It's just a matter of, at each stage refining what we're doing.
Absolutely. Absolutely. Yeah, that's part of it. And also I think building the team ahead of time, it's the dig your well before you're thirsty idea that you got to get those things in place. What was the code that you feel like he cracked on the LOIs? Was there something he did differently? Was there a new presentation on it? Was it just happenstance timing? Was there an aggressive or different? I guess, was there anything you feel like was done differently in order to produce those results?
There are a couple points that kind of stick out. One is a short due diligence period. The sellers really want to just like, no, it's like, okay, it's sold, it's done. Right. And so that's 30 days. And we're pushing back on less than that. They want it less, but we want to make sure we can go through the rent rolls and do all the due diligence and get all the inspectors in we want to. The second one is once the due diligence period is over, a significant earnest money goes hard. Right. And that's the part that's painful. And so, in fact, we lost a little over $400,000 on one of those properties that we had to cancel the contract on. And the other reason is we were dealing with the traditional regional bank. And so we're working on finding funding sources that understand value add multifamily.
Right.
This bank understood multifamily, stabilized.
Right.
But not, hey, it's not fully occupied. Yeah, of course, that's value add. It needs work. Yeah, that's value add. And it's 30% below market where it will be once we stabilize it. So we need to find funders that understand that.
Yeah, absolutely. $400,000 was lost in earnest money.
Yes.
That's nauseating. I'm sorry. Yeah.
Thank you.
How did you recover from that? How did you split that up amongst the team members? What did that conversation look like?
There's a lot of stress, but I mean, the plan is, when the other parties went with their organic network, and I didn't really have a good organic network track record, coming into this, I went big. I went, okay, family offices aren't ready for us. Okay, who can raise this money? These private networks, private money, and I've gotten a lot of no's, but I'm still waiting on at least 3 that are still developing that I might get 25 million a quarter to raise. So my plan is we already set up a fund and put money into the fund, and the fund will pay the limited partner part. So on the LOIs, it's like, we need 3 million. Yep, got it, go. So take that piece out of the equation so we won't lose it. And eventually over the number of properties in the future, we can recoup the 400 by the acquisition fee.
Got it. Yeah, no, that's absolutely. That's I'm sorry to hear about that. That's, man, I hate to hear those stories, but I know that, those things do they do in fact happen. So thanks for being willing certainly to share that with us. Richard, it's been a pleasure having you on the show
Thank you.
today. Certainly appreciate hearing your journey. How especially the asset recovery side of things, then getting involved in multifamily. It sounds like you got a few deals under your belt here and closed, and you guys have a clear path for forward growth. So I think that's really, really cool. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Um, well, I'm on LinkedIn with my name is Ellison1, RELLISON1. My website is relcoindustries.com, RELCOINDUSTRIES.com. And that's the best way to find me.
Fantastic. Richard, thank you again for coming on today. I do appreciate it.
Thank you. It's great talking with you.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.